Hello, everyone. Welcome to Inconvenient Truths. I'm your host, Jennifer Zheng. Today, I will talk about the latest tax revenue figures that were just released by the CCP and what those numbers can tell us about the Chinese economy. During the process, I'd like to present an important view on whether the current situation of the Chinese economy is the result of the lockdowns or not. On March 17th, the CCP's Ministry of Finance released the revenue figures for January and February this year. The overall picture portrayed by these figures is very gloomy. Let's check some of the numbers. So in January and February, the National General Public Budget revenue was about 4.6 trillion yuan, down 1.2% year-on-year, while the Central General Public Budget revenue was about 2 trillion yuan, down 4.5% year-on-year. The national tax revenue was about 3.9 trillion yuan, down 3.4% year-on-year. Those are the general numbers. If we check the specific numbers, we will find that the domestic consumption tax revenue dropped by nearly 18%. Personal income tax dropped by 4%. Import and export consumption tax and value-added tax dropped by about 22%. Customs duties dropped by 27%. Urban maintenance and construction tax dropped by about 10%. Vehicle purchase tax dropped by about 33%. Stamp duty dropped by about 32%. Security stamp duty dropped by about 62%. Resource tax dropped by about 10%. Real estate related tax, including deed tax, dropped by 4%. Land appreciation tax revenue dropped by about 22%. Property tax revenue dropped by about 3%. State land use rights transfer fees dropped by nearly 30%, and urban land use tax dropped by about 7%. Environmental protection tax dropped by about 11%. From these figures, we can see that the biggest drop is the security stamp duty. This means there were much fewer activities in the stock market, as security stamp duty is a tax you pay when buying or selling stocks in China. And because stock markets are one of the most direct indicators of the economy, this, of course, means the economy isn't doing well. The second largest drop is the vehicle purchase tax. This means people are not buying cars. Actually, in January and February this year, China's auto sales dropped by as much as 79% and 41%, hitting a record low. In Hubei province, if you buy a Dongfeng model vehicle, you can get a subsidy of up to 90,000 yuan. 90,000 yuan. That is about 13,000 US dollars, and almost 40% of the car price. Over 10 other provinces and cities also followed up with relevant policies to promote auto consumption. For example, First Auto Works in Changchun City launched a promotion campaign with a total subsidy of 150 million yuan and a single vehicle subsidy of up to 37,000 yuan. In Jining City, Shandong Province, individuals can enjoy government subsidies of 30,000 yuan, while corporates can have up to 75,000 yuan, etc. Now look at this table. The first column is the model of Dongfeng cars. The second column is the price of the cars. The unit is 10,000 yuan. The third column is the subsidy that the car maker is offering, and the fourth column is the subsidy that the government is offering. This is the discount a car dealer is offering for its cars. Again, the first column is the model of its cars. The second is the price of the cars. And the third is how much discount the dealer is offering. Look at the top row. For a car that is sold for 236.8 thousand yuan, you can get a discount of 78,000 yuan. That is a 33% discount. With such aggressive discounts and subsidies, the sales volume still dropped so terribly. So what stories are these numbers telling us? Now, let's look at the share price of the GWM. I think it represents Great Wall model. In just a few days, it lost about 30% of its value. If we check longer, the price has dropped about 70% since October 2021. So this is just one example for us to understand the situation. Now look at this. Look at the red numbers only. They are the state land use rights transfer fees in January and February from 2016 to 2023. The unit is 100 million yuan. You can see that in 2021, the number is 1.1 trillion, and in 2022, the number is 79 billion, and this year it is 6 billion only. So it is only half of the 2022 number. We all know how important those state use rights transfer fees are for China's local governments. More than 40% of the local government's revenue comes from the state land use rights transfer fees. Now, with these numbers, let's try to answer the question we raised at the beginning, whether the current situation of the Chinese economy is the result of the lockdowns or not. From these numbers, we may argue no, it is not. In 2021 and 2022, many Chinese cities were under lockdowns, but the land use rights transfer fees were higher than this year when the lockdowns were already over. As far as I can see, the lockdowns actually delayed and covered up the real problems of the Chinese economy. The Chinese economy lacks the foundation to grow by itself. Its high-speed growth in the past several decades had been relying on the market, technology, and investment from the outside world. The CCP dumped the international market with low-priced products to capture market share. It stole technology from other countries, and it lured international capital to invest with market prospects, but failed to bring real returns. Now, with all those factors that brought growth to the Chinese economy have gone, the engines for the Chinese economy has also died down. Just like the saying goes, it's only when the tide goes out that you realize who's been swimming naked. So some experts are predicting that if this kind of revenue decrease continues in the second half of this year, if Europe and the US fall into recession, China's finances will completely collapse, and that will be like the eruption of the volcano for the Chinese society. Well, the above is the situation of the tax revenues. Now let's check the expenditures situation. In January and February, the National General Public Budget expenditure was about 4 trillion yuan, an increase of 7% year-on-year, while the Central General Public Budget expenditure was about 423 billion yuan, an increase of 8.7%. In terms of specific items, apart from the expenditure on culture, tourism, sports and media, transportation and energy, conservation and environmental protection, all other expenditures have risen, and these are the details. Education expenditure up 1.4% year-on-year. Science and technology expenditures up 3.6%. Social security and employment expenditures up about 10%. Health expenditures up about 23%. Urban and rural community expenditures up 0.7%. Agriculture, forestry, and water expenditures up about 11%. Debt interest payments up about 27% year-on-year. From this, we can see that health expenditures and debt interest payments increased the most. Health expenditures increased because China just experienced a tsunami of outbreaks in January. The increase in debt interest payments is a very bad indicator of the huge debt problem of the government. Now, many local governments have to borrow new debt to pay off the old ones. With the debt already in astronomical figures, the situation can only get worse. Now, this is the situation of the national governmental fund budget income and expenditure. Government funds are connected within a certain period of time is specifically for the development of specific public undertakings, such as the so-called Three Gorges Project Construction Fund. This kind of fund is the second largest source of fiscal revenue in China after taxes. So in January and February, the national government funds budget revenue was about 696 billion yuan, down 24% year-on-year, while the national government funds budget expenditures were about 1.2 trillion yuan, down 11%. From this, you can see that the expenditures were much greater than the income, while the revenues have fallen more than twice as much as expenses. This also contributes to the overall worsening situation. When I tweeted these numbers, somebody asked me, how can you trust the CCP's official numbers? Well, I agree that we can't trust the CCP's numbers. But compared with the GDP numbers, I guess these tax revenue numbers are closer to the true situation. Why? Because if you exaggerate the revenue numbers as you do with the GDP numbers, people will naturally expect you to spend more. If you didn't have that kind of money, what do you use to cover up your lies? So these numbers may tell us a truer picture of the Chinese economy. That's why I'm sharing them here. Hopefully, they will be helpful if you ever need to make a decision about investing in or doing business with China. Well, that's all for now. If you like my content, please spread my channel and videos or go to my website at jenniferzengblog.com. That's jenniferzengblog.com. Sign up for a membership or make a donation to support my efforts. Thank you.